I guess the biggest contribution that GATA has made over the years, and that's really where I first started. I was writing, and most of my work showed up on GATA between 2007 to 2011 or 12.
Yes.
And GATA has extensively shown actual and anecdotal evidence that the gold and silver markets are rigged, that they've been suppressed for years and years. And the first question people will ask is, well, why would governments even want to rig the gold or silver markets? And that's pretty simple. First off, silver is a very, very small market. So if silver caught on fire, gold would follow. But if we were doing this interview right now with $5,000 or $10,000 gold, and the market's doing what they're doing, then it would appear as an escape hatch. It would look like a way to get out of the system and into something that's going higher. You need to understand that gold is the direct competitor of all fiats, and especially the world's reserve currency, the dollar. So every single day that you wake up and you watch trading, and then all of a sudden you see a waterfall. I work as a precious metals broker, and I can tell you over these last week and a half, 2 weeks, where silver's gone from $27 paper $27 to call it in the 21s. I've had one sell order. So people are not scrambling and selling physical metal. What they're doing is paper is being sold on COMEX, paper is being sold on LME, LBMA. Paper is what governs or fixes the price. So it's a true case of the tail wagging the dog. And I would urge, there is a page on GATA, and there's probably 200 posts outlining how the suppression is done. And I mean, just look at how many guilty pleas have been made or settlements have been made by various firms relating to gold rigging. And of course, JP Morgan being the largest, they have 4 or 5 of them.
Yeah, so the key point, and we have had previous guests from GATA on the show, is that there's a concern among many people, including GATA, of course, that there is manipulation in gold and silver markets, and in particular facilitated by the paper assets, which are not 100% backed. And the motive there is to undermine an alternative to the fiat currency system. Do you want to correct anything there?
Exactly, that's correct.
Yeah, and
dollar good, gold bad. That's what they're trying to portray. They're trying to portray dollar good, and understand the reasoning behind dollar good. They want people to think dollar good because what is it that these central banks and treasuries have to do every year? They have to borrow money. The treasuries have to borrow money. That's deficit spending. So if the currency itself is being shown as trash versus real assets, how are they going to borrow? And the answer is now the way they borrow is the central bank directly monetizes for the treasury.
Yeah, we're living in a very strange time when there's so much volatility in the stock markets. Rather than racing to gold for protection, people have been racing to the US dollar. How do you explain that, right? You would just think this is a currency that's already inflating highly, and yet people are leaving stock markets to just to park their assets in cash.
Well, understand, you're saying that the dollar has been strong, and according to the USDX, that's true. But the whole USDX is all fiat, it's all trash, it's all garbage. If you're telling me that the dollar's been strong, then how come a gallon of gas costs $4.50 or $5 a gallon when 2 years ago it was $2.50? I mean, you could just go down the list of anything: lumber, food, energy, services, you name it. The dollar is buying far less today than it did 2 years ago. So saying that the dollar is strong, I don't agree with that at all. The dollar is weak.
No, I don't think I use that term. In fact, I said inflation is high, and yet people are still going to the dollar. And yes, it's strong relative to other currencies, which are also in
Other
a panic.
currencies.
Yeah. So
right,
that's
but it's tweak versus real stuff.
Exactly. And so that's why, and this has been a theme we've been discussing on the show. Why have people chosen to just park their wealth in, let's say, treasuries or whatever it may be, and not go for gold? Why haven't we seen this rush to the one asset that has the greatest pedigree?
Well, you actually are. From a retail standpoint, the volume over the last year or 2 years has been huge compared to previous years. You're also seeing some central banks purchasing gold. So there is actually a huge increase in both demand for gold and silver.
Right. But but basically this is the disconnect between holding physical and holding these paper, the GLD ETFs, or just paper versions. And do we have any sense for how much backing there is for the paper gold equivalents?
You can go back to, I think it was 2010 or 2011. There was a CFTC hearing where
Yes.
Where it was basically disclosed that it was basically 100 to 1 at that point. And I've seen studies since then, 2015, 2017, where there's 300 paper ounces for every 1 real ounce that exists. And I mean, I would just tell your viewers or subscribers,
Yes.
If you're buying physical metal, just wait this out, because look what happened in the nickel market a month and a half, 2 months ago. That was a short squeeze because there was way too much paper outstanding for the amount of nickel that was deliverable. And you saw nickel move up 250% in 2 days. Now, the second day, all those trades were canceled. And I believe that shows that whatever rule of law there is, it's for the insiders, it's not for the outsiders. But when all is said and done, and these contracts have to perform, they can't, because there's too many contracts for every single ounce outstanding. So, like I said, my advice is buy physical gold, buy physical silver, and wait it out. Don't buy paper products, don't buy GLD, because you don't have the metal in your hand. You don't know if the metal even exists. Look at GLD's prospectus. They come right out and say in the prospectus, they don't have to have all physical gold. They can have contracts. They can have futures. And my partner, Jim Sinclair, has consistently asked for years, what is the value of a contract that cannot perform? And of course, the answer is zero.
Right. So yeah, but let's say people have already got a holding of the physical, and they want to get the returns that come with holding mining stocks. So do you see that as a separate challenge, that mining stocks are a way to get around this manipulation?
Mining stocks have been crushed. It's my personal opinion that well, this is not opinion. There are many companies where there's more volume that trades off exchange than on exchange within dark pools.
Yeah.
Prices have been crushed. Prices do not even resemble. I mean, you can look at the HUI. What was the HUI? Was 600, 650 back in 2010, 2011. And here we are at 240. So you've seen the HUI drop more than half, and gold is higher than it was then. As far as leverage to gold, or leveraging the gold price,
exactly,
you're better off owning a mining company for several reasons. One, for the financial leverage, the operational leverage, the leverage to gold historically had been 3-to-1. And that leverage over the last 5, 7, maybe even 10 years has been broken. And it's my contention that the ratio has been broken because now we're seeing dilution with by short selling with naked shares. Now, I can't prove that, but I can prove that more than half of volume gets traded off exchange between 2 or 3 or 10 or 50 different dark pools, and there's no way to find out whether those shares that were sold actually exist or don't. And the best example of that is high market mining. I think it was about 2 months ago, over I think it was a Thursday and a Friday, they traded 550 million shares, yet the company only had 62 million shares outstanding. So unless somebody can explain to me how that's actually possible, I view that as absolute, to me, that's absolute proof that there's something nefarious going on. Because remember, if a company has 60 million shares outstanding, the float is only a small percentage of the total outstanding shares. Well, in the gold and silver area, you probably want to be 70% physical, 80% physical. I mean, it all depends on your own personal makeup, the way you think, the way you feel. But right. I would not ignore mining shares, because the mining shares are where the leverage is going to be. And when the financial system breaks, you've heard the term reset. When the financial system breaks and prices reset, mining shares are going to far outperform the price of gold and silver, simply because of the operational leverage.
You mentioned a leverage of around 3, and you just say there's not a clear ratio anymore, or it's much higher now?
It's probably higher than that. It's going to be much higher than 3 to play catch up for the last 10 years where that leverage did not exist. In other words, mining shares are going to need to reset versus the price of gold and silver.
Right. And you are follow geopolitics closely, and you believe that the US dollar is, let's say, coming to the end of its days. Is that an accurate assessment?
Absolutely. The dollar was saved in 1973, 2 years after Nixon took us off the gold standard. It was saved in 1973 by getting the Arabs, the Saudi Arabians, to sell their oil and only accept dollars. And they took those dollars and they recycled into treasuries. So that for many years served to support our treasury market, support our borrowing needs. At this point, now you've got Russia talking about selling their oil in either rubles or gold. You have India becoming friendly with Russia. You have Saudi Arabia certainly becoming friendly with both Russia and China, and no longer demanding only dollars. They will take yuan. They will take rubles. The point being, what was 100% dollars as far as settlement, it's no longer 100%, and that number is shrinking. So in essence, the petrodollar is dead. There's no longer a petrodollar.
Right. And so what will replace it then in terms of the medium of exchange?
That's hard to say. I'm sure that you've got many nations, and they're working on it right now, working on central bank digital currencies. Again, right. The problem, a blockchain is a perfect accounting system, but if you're accounting for dog crap, it's a perfect accounting system of dog crap. And basically that's what you're looking at with these fiat currencies. There will be no difference between the current dollar and a Federal Reserve central bank digital dollar. They're both backed by nothing. We believe that there's going to be 2 resets. The first reset will be what we just talked about, central bank digital currencies trying to stay on the fiat system. and
Yes.
thus allowing the power to remain with the issuers. And we believe that will not last more than 2 weeks, 2 months, 6 months, maybe a year. But the problem is there's too much debt in the system. The debt cannot be repaid. And we do believe that there will be a panic out of or away from or a distrust of new currencies. And then you'll have the Mother Nature reset. And that's when things get reset physical to physical as opposed to using derivatives. You need to understand that using derivatives with 10 to 1 or even 100 to 1 leverage, you don't have to use that much money to actually price assets in the marketplace. When I say price them, they get priced according to whatever the narrative is that the governments want you to believe. Something good, something bad. One asset is good and they bid those up. The other asset, gold and silver, bad, they suppress those. So understand that this whole game has been rigged, and it's been rigged with derivatives. It's been rigged with paper products. And one last thing, there was 1.4 quadrillion in derivatives back in, I think it was 2011 or 12. And I don't think it's too far of a venture to say there's over 2 quadrillion worth of derivatives now.
Right. And just in terms of the central bank digital currencies, I share your concern, and I don't see central bank digital currencies offering anything to the individual or constituent. They are merely an attempt to stave off actual cryptocurrencies or private currencies from dethroning fiat or state currencies. So I see central bank digital currencies as a grave problem, and one that allows even more control or manipulation of our cash or our money than before, and even exclusion from participation. So you mentioned the papering or derivatives approach. How can people learn more about this? So I mentioned the Flash Boys book, or should they just be reading your website, jsmindset.com or GATA? Where can we go to learn more about market manipulation, how to navigate it? Yeah.
Yeah, GATA has a page. I think there's probably close to 200 different articles showing proof on when you connect everything together. It's absolutely, it's a case closed as far as showing and proving that there is manipulation. Yes, you can go to JS Mindset. We talk about it. We've written about it. We post articles, various articles on that.
And are you optimistic that in this era of social media, of so much more scrutiny of everything, that this manipulation will be basically come into the spotlight, that more people will become aware of it, and there'll be some sort of reckoning there?
Well, when you say scrutiny of everything, I would go 180 degrees different from that, because the way things are right now, everything is bullshit. I mean, all you have to do is read mainstream media, watch mainstream media on the TV. And it's very simple. All you have to do is listen to what they're telling you, and it's the opposite. And here's a perfect example. You could drive around neighborhoods and you see Ukraine flags flying on U.S. soil. And you hear people say, I'm with Ukraine. Putin's bad, Ukraine good. Well, I'm not even going to be partisan here. You could look on both sides. You could look at McConnell, Mitt Romney, Pelosi, Hillary, Biden, Obama, you name it, they're all with Ukraine. And topped off by George Soros and Klaus Schwab. They're all with Ukraine. So guess what? I'm not. That's the easiest way to do your research right there.
Yeah.
If people that you know are completely full of shit, and they're all on one side, I'm on the other side. It's simple.
Well, I have been disconnected from legacy media for many years now. So I guess both of us live outside of that. And I do recommend Epoch Times to people. I have written for them. So that's one alternative outlet I think is excellent. Okay, so you're not so optimistic. And one challenge with modern markets, yes, is that with the dark pools, as you said, it's so hard to pierce and know what exactly is going on and to build a case to express concern, or like you said, just to gather evidence of naked selling. And that's what the book is about, the Flash Boys. Why do you think, I'm not sure whether you followed this, but IEX, the Investors Exchange, why do you think it has never succeeded or really risen in market share?
I've not followed that. That's familiar with.
Basically, it's an exchange here in the United States that was set up basically to be more transparent and to not allow market manipulation. And it has just struggled, right? It struggled to gain popularity.
That's why. They were set up for transparency. That's why they're not getting any traction.
Because you view the major insider players as not wanting to participate in that.
Right. Hey, George Carlin said it. It's a big club, and you're not part of it, not in it. And I mean, if you're trading and it's profitable for you, it's opaque, you can't see it. Why would they want to change things to be transparent so that what they're doing can be seen? That wouldn't make any sense.
Right. Well, yeah, that was actually the opening line of my review, that George Carlin quote, which is useful. Now, folks, if you want to learn more from Bill Holter, the website is JS Mindset. Now it's JSMINESET.com. He's also a precious metals broker. And do you want to mention the website for that one too?